What's up, everybody? It's Dylan here. Today I'm going to be going over probably the most important topic, and it's going to be the big banks and the Forex liquidity. These are just massive topics that need covered, and we're just going to cover this on Euro USD because it moves pretty smooth. Let's go here and price. Okay, so we're going to go over what retail and how they trade and why it gets liquidated a lot. It's not that it doesn't work, it just gets liquidated a lot. We'll just start right here in price. Okay, so for example, you can start to see a trend here with retail. If I zoom out just a little bit, and you'll kind of get an idea of what's going on here. So right here is a big area of resistance for retail, right? And I don't trade this way, so if some of my terminology is off, sorry. But this would be considered retail resistance, and right down here would be considered retail support, right? Because it needs support to buy and resistance to sell. Okay, so right in here, there's a lot of resistance and a lot of retail getting involved into sells. Really, it even starts like right here. This is where they start to get liquidated. Okay, because they don't know that the resistance is this high yet when they're in price. Okay, so you can start to see these double tops forming. Retail sees that as a signal to sell, even on a lower time frame right here. This is called a head and shoulders, right, for retail. They use that to trade for the sell side as well, and you can start to see that price is starting to form these equal lows right here as well. Okay, now this is where this is a typical setup that you see for retail to get liquidated, right? Let me move that just a little higher. Okay, so you start to see retail getting into the sells, and then you start to see retail getting into buys, and they think this price is just going to range right here. And that's when the institutions finally see that there's enough liquidity here to take out. So what happens? They start to bring price to the top side, liquidate the bottom side, bring it fast. Like, I mean, you can see how long it took for price to do just this. And then you can see how fast they liquidated one side, liquidated the other side, and then pushed price back the other way. Now, what happened here specifically? Everyone was in sells, right, for retail. It got down into the retail support, okay? So now they've put protective buy stops up in this area, right above this high, because this is the high that they currently see, right? So there's buy stops here now, right? Hello? There we go. Yep, okay, here we go. So now there's buy stops and stop losses up above this high right here. Because retail, when they're selling and they're not quite sure where the market's going, they like to hedge their positions, especially bigger banks that can afford the loss. If they are not sure of where the market's going to go in that short term, they will hedge their positions. So retail is obviously selling into this. Some retail is buying into this, but not as much, obviously, because you only get a little bit of support down here. That gets liquidated relatively quickly. Then price pushes back up through these stop losses and buy stops, and then what happens? There's an order block, okay? An order block is just a move that liquidates one side or the other and then pushes price back the other way without ever returning to it. Okay? So right here, this is your order block, by the way. On a different time frame, this would look a lot cleaner. I'll show you a clean. Actually, you're about to see a cleaner order block, but this is your order block. Okay, so it liquidates price, pushes it back the other way. You can see that they never want price to get back up into this area where they triggered the buy stops, so it only comes to about half of the order block, right? And that's them mitigating part of their buys up here, because they had to make a buy into this move to liquidate all these guys before they brought the sell down, and so they have to bring price up a couple times to sell off their long positions so they can push price lower, and that's exactly what happens here. Now that retail is trapped in buys up on the top here, price starts to drastically push down to the bottom side, and retail obviously catches on to this. So you can see that once the price is getting back down to here, it blows through this retail support. They're all starting to sell again. So there's retail buying and selling up and through here, and then what happens again? You know, price liquidates them and then pushes it lower. Now this is a big freaking wick, but the point still stands. Price won't get back above this area until they're ready to push it back above this area. So this right here is technically like an order block to keep retail down. but it's an order block off of an order block. So there was already one up here, and then there's one down here. So this order block right here is most likely to get traded through, right? But we'll leave it up there. The institutions push price back down. When they see a consolidation period like this is where money is transferring hands. Okay, so the strong hands are now starting to transfer the money back to the weak hands, right? Into the non-premium pricing. And you can see that after the consolidation of this move right here, which on the lower time frame is a trend line starting to go up. They're starting to get support here as well. One second. I like to give you guys visuals so you can kind of actually see what's going on here. Once retail starts to see support here, they'll once again start to buy, right? And at the same time, there's retail that are starting to see this right here, like double tops forming, head and shoulders, whatever the hell you want to call it. Retail is starting to see patterns here, right? And you see after like this right here, this next high, that there's a liquidation to the bottom side. So this is now really starting to put retail into the selling mindset. Once this support has been taken out, retail is starting to think that like, oh, okay, the sell is good to go here, right? And they even get more confirmation here when the institutions start buying up into this. It gets pushed down one more time, and then you can just see that price starts to slowly set back right out this way, never really giving them a chance to get out of their sell positions. The reason this works for the institutions really well is I should go over this because this is important. Retail is really greedy. Actually, not retail. People are greedy in general. Like, there'll be people that get into positions, you know, like nice solid positions up here. They'll probably have their stop loss, you know, something crazy like that. And they'll let price get all the way down to this low without ever taking any money out of this position. They just assume that price is going to go this way forever. Maybe like form a completely new low. And there are people that do this all the time, like, and then they wonder why they get stopped out. It's because they're greedy, and the institutions literally count on that. So when there's money transferring hands here and they liquidate the bottom side and trigger all these sell stops and then start to push price to the high side, like, it's for a reason. Like, they can see that the orders are starting to build up right in this area, and then they can see that you have protective sell stops right down here. And what do? They take price, push it straight through all that, liquidate it all, and then push price back away. And you just see it over and over and over and over and over. So that's how retail gets liquidated. Like, you can just go to any point in price and just see it. Like, you can see the transfer of weak hands to strong hands. Like, retail starts to buy, liquidated to the top side, hits the buy stop, starts to move to the bottom side. You know, this move looks like it liquidated something specific. Yes, this right here. So you got to keep higher time frames in mind too. So there's equal lows right here that this came and liquidated. And if anyone's ever been paying attention on the Euro USD, you know there's this huge drop off coming. It's not right here, it's a little further ahead, but so this liquidated those, push price back to the top side, right? And this is just a constant back and forth battle game in the market. Now, the reason retail works, and you shouldn't discourage it, like if you find a retail method that works, like you find something, you know, algorithmic trading with indicators and whatnot that works, by all means trade it. If you're making money, don't let me talk shit to you. Fucking just tell me to shut up and I'll shut up. But like right here, here's a perfect head and shoulders that worked. I went to the bottom side, and like there was guaranteed somebody that caught this move all the way down, more than somebody, a lot of people that caught this move all the way down. And that will happen from time to time in the market. But then again, like, you'll also find head and shoulders, you know, that start to form like this. They get liquidated and then pushed down to the bottom side. And then they get trapped up in buy positions up in here. And the dumb money can't get out. Like, they're literally sitting there trapped. And that's for the people that hedge their positions and don't trade with stop losses because they're psycho. Same concept right here. They liquidated to the bottom side and then liquidated to the top side. Not really liquidated, but they did take out this intermediary liquidity, because above every wick until it's been taken out is liquidity. So like all through here there were stop losses and buy stops to the top side that obviously got triggered and then taken back down. Like, you can just see that's what happened in price right there. If you want a way to confirm that what is happening on a lower time frame is what you're seeing, you can let me, because this is gonna jerk me back in price real quick. You can confirm it through Wyckoff. If you don't know what that is, I will leave a link in the description like I always do, linking you straight to what Wyckoff is. We could probably go on a 2-minute here and see this. Oh, we gotta go way back. Okay, this is a terrible example. Oh wait, 1 minute might look better. Oops, shit. 1 minute might look better. Well, here's a good example. I'll put a box around this so you can see it on a higher time frame. Okay, you'll start to get this forming right here. This is a distribution for Wyckoff, right? You'll get some stopping action and price right here. Okay, this is called the selling climax for Wyckoff schematics, and this happens in price over and over and over and over too. So this is very tradable. Then you'll get what we call an ST, an intermediary ST, or you could consider this the buying climax and this the ST, and then this the up thrust. This is the move that liquidates both of these. Not always, but most of the time, these are like even, if not very close. You can see they're not entirely even here, but you have this move. You'll have a slight break in structure sometimes not. Schematics aren't always perfect, but a lot of the times, like you'll see it. Like, in the more you look at the market and the more you practice and trade, the more you'll see this. And then you'll get this final liquidation right here. This liquidates the top side of the market and grabs the final buy stops and the buy stops and stop losses before moving price back down in a direction. And you can just you can see how aggressive price moves back down. This is how you know the schematic's actually unfolding right here. When you get this final move from here to here, right? This is the aggressive move that's not letting these guys back out of these buy positions that were hedging their positions because they were psycho and they thought they could outsmart the banks. So when they're in buys up in here and price is moving the other way, these guys would just keep going negative and negative and negative until they're finally forced to close their positions, or their accounts get margined, right? And institutions, they will only bring price up to where they need it, right? And we're gonna see this on a higher time frame now. Let me find my box. Oh, here it is. We're on this one, I think. Okay, so you can actually see it, right? They will only wick back up into price when an order block is finally formed to liquidate one side or the other, before they finally push price where they want it to go. And then they will consolidate price for a period of time until these guys have like finally kicked out of their trades, and then they'll move price in their new direction. Obviously, we're at the start of the market, so there's not a whole lot you're going to see happening here. It's probably coming to test this order block, or there's some this big imbalance right here. The price is going to come and test. So that's what Wyckoff is, and that's what an order block is. This is really important. These happen all the time in price, and they're respected really well. I use them to trade quite often. They work. I'll just tell you that much. They work very well. I make a living off them. So the last thing I want to go over with you guys in this video, because I'm not making a 50-minute long video on liquidity. Like, if people want to learn more about it, I'll make another video, or they can just come to the mentorship. The last thing I want to go over is your time frames. Every single time frame. Let me remove everything. Drawings real quick. Every time frame is going to show you something different, but the higher the time frame you go, the more likely you're going to fuck up on your or the less likely you're going to fuck up on your trades. That's what I meant to say. So, like, for example, like when you're looking at price on the daily time frame, like, you can clearly tell that it's bullish, right? It's been bullish since freaking COVID. On the euro US dollar. This isn't for every market. 4 hour starting to show a different story here. You're getting a lot of breaks in structure. 1 hour completely bearish. Like, literally completely bearish from here to here. You have this bullish momentum, but it's obviously broken so much structure that you need to start to consider this bearish. So you're looking for sells here, but then all of a sudden, you get onto the 5 minute, and now all of a sudden price is fully bullish, and you're getting confused and messed up back and forth in trades, probably taking a lot of losses, and you're not quite understanding what's going on. But in reality, and this is why I trade on the hour time frame specifically, because I can zoom out just far enough to really see what was going on over here to make an educated guess onto how to trade over here. So like I said, like once you start to get here's a great Wyckoff example, by the way, and it gets tested over here and then pushed back down, but it doesn't always have to respect the schematic, by the way. And sometimes the retest is as simple as this little wick right here into that order block, because this is your order block, right? One sec. right? This is your order block, and sometimes like that little wick or this part of the candle coming back up is all they need to cover these positions over here. It just depends. Like we don't know how much time the institutions or how many orders the institutions have in that specific area. We can only make educated guesses. So anyways, what was I getting at? Time frames, right? The reason I trade on the hour time frame for the most part, I'll come down to 30, 15, sometimes even 5 minutes to get into entries. I used to trade on like the 1 minute and the 30 seconds because I was a psycho. But I've learned that I win more trades when I'm on the higher time frames, like from the hour to 15 to 5, anywhere within this range. You're probably going to be all right because you need to be able to see more of what's going on in price. Now, if you're a retail trader and you're trading patterns or indicators and you're making that work, once again, don't let me stop you. If you're making money doing it, don't let me stop you. Just trade your way and just keep doing you. But if you're trading and you're struggling and you're just constantly losing trades, maybe it's time for you to switch it up, and smart money might be the way for you. So pay attention to the rest of the videos in this course because I'm going to teach you guys how to get into the trades that I get into. I have a Bitcoin trade going on over here. I have two. This one I didn't get into. This one I did get into. And it was really just off of order blocks. And I'm waiting for inefficiency in price to get filled, and then for this order block to get tested before price on Bitcoin probably moves back down. Oh, that's one more thing I should go over since we're using the word probably. Trading is all about probabilities. There is nothing in this market that is factual, right? The only thing that like you could say is factual is that the market has to go up and down, but the market does not have to respect anything that you may or may not think it will do, okay? Like, it does not have to respect it. So when you're trading and like you're confident that you know a position's going to do something, you need to start thinking again, because it does not have to do what you want it to do. And the market will show you that many times in a row. And if you're for some reason really in tune with order flow and you understand the market inside and out and could trade better than everyone else, I mean, good for you. But 99% of people can't. 99.9% of people can't do that. So if you're in the other minority, or in the majority like me, I should say, if you're in the majority like me, you should start to consider probabilities, what's most likely going to happen instead of what is happening or what's going to happen. So like, for example, here there's an order block here after price got liquidated, right? Price could come down into here, then back up to here, but since it's already so close to this order block, price may come and test that before it finally comes back down. Or since there's this trend line of liquidity right here, I removed my markups, but I actually had a really nice markup on Euro USD. But since there's this trend line of liquidity starting to head down this way, price may just blow literally straight through this. It might test the closest order block and then blow straight through this, come to about 50% of this where the sells are most likely sitting, and then move price back down, because I mean, we're obviously in a bearish trend, so you should probably be looking for sells for the most part. That's I think that's mostly what I wanted to cover in this video. My last liquidity video was just all over the place. This one I wanted it to be more streamlined so you can actually see what I'm specifically looking at when I'm trading in the markets. If you guys have any questions, just throw them in the comments. I'll do my best to answer them. I'm a pretty open person about how I trade, so I don't have any problem answering questions. If you guys need one-on-one guidance, Mentorship's available. There's already a few people in it. They're learning how to trade, so... And for the most part, from what I could understand today, they were all learning quite a bit. So don't be shy. Come on by. I made sure I made it cheaper than a lot of the others because I didn't want you guys fucking going broke trying to learn Forex trading when it's really, you shouldn't. All the information's online, but if you really feel like you need one-on-one guidance, just come on by. I'll do my best to help you. I'm going to keep posting videos, so if you don't get it in this video, hopefully the next one helps you, or the next one after that. I plan on posting at least 15 course videos, so like they should all flow together, and by the end you should understand how to trade. And if you don't, that's probably when you should join the mentorship. Unless you really want to get started trading now, then I'll make time for you in the mentorship like I am these other guys. I don't have anything else for this specific topic, so if you guys learned something in this video, please leave a like. Subscribe, share the video, helps out a lot, and I hope you guys have a wonderful day. Take care.